So in this version of the Ultimate Trader Workshop, episode 4, I'm going to be showing you something that I'm sure you've never seen anything like this before. I'm going to be stacking 3 technical indications on top of each other as they converge and create confluence and create a very, very powerful trade opportunity. So let's jump right into it. So the Forex pair that we're dealing with is Euro NZD. I said there were 3 technical indications. I'll go ahead and give them to you now. Inside of what you see, you probably can't see it yet. But number 1 is going to be the 2618 trade. I know you guys have been seeing me talk a lot about the 2618 trade or 2618 technique. The trade following that is going to be a bullish butterfly pattern. You probably can't see it on the charts yet because your eyes aren't trained, but I'm going to show you how to identify and trade it. And if you want to know more about those two, the 2618 trade and the advanced butterfly pattern, you can find both of those trainings inside the Harmonic Trading Academy playlist. The third thing that we'll be stacking on top of those is using the 3-bar reversal or the trade 3BR to confirm our entry. There's going to be some trade psychology in this to show us that sometimes you just can't jump the gun. You gotta slow down and wait until you get confirmation. Those things being said and out the way, let's jump right into it. So let's start with our 2618 trade first. And that starts with identifying this double bottom here. Okay, that's this double bottom followed by this break and close, okay, above the previous structure, which is the V-neck that was created from the double bottom. So 2618, 2 standing for double bottom in this case, 618 standing for 618 retracement. So double bottom followed by break and close followed by 618 retracement. So let's complete the first part of our trifecta. So swing low to swing high. And what do you know? When we come down here, price action just wants to come down here and deal with our 618 retracement. So just trading the 618, the 2618 alone, a trader could be happy and be ready to take his chances and say, hey, I'm in there. I'm going to start plotting targets. I want to see where this goes. Not me, though. I'm looking for more because I want as many overlapping confluence factors as I can get. Okay, this one just happened to give up a little bit more than we usually ask for. Number 2 in the set of confluence is a advanced butterfly pattern. So I will walk through the rules of engagement. That starts with this portion right here being, actually, you know what, I won't use the tool. I use the lines. Identifying this impulse here, right, which comes down here, right, and what for the advanced butterfly pattern, okay, the rules of engagement state, this is X, this is A. B is valid with a 786 retracement of X to A. It's deeper than BAT, which is 50, and it's deeper than Garley, which is 618. So let's go ahead and bring on the Fibonacci retracement tool so I can show you that. So measuring that impulse, swing low to swing high, and bringing on the 786. That's the only thing I want to see here, okay, to show you that that condition was met for a valid B leg on a butterfly pattern, okay? Guys getting that? So what I'm going to do now is I'm just going to go ahead and cross him off real quick. And I do want to validate his D-leg completion. The D-leg is complete with a 127 inversion from A to X, meaning kind of going the other way. So an extension in reverse. So let me grab the extension tool and show you that that D-leg is valid. High to low inversion, Fibonacci inversion uses the extension tool. And I said it's the 127 inversion of A to X. Meaning I went from A to X. And if you notice, all those 3 things come together. That 618 retracement from the 2618 trade plus the 127 inversion from the A to X leg, okay, all coming together in one spot. Thirdly, okay, you might be asking, well, why not just enter the trade? It looks like a trader who would have entered the trade could be winning, okay? And the reason is because there was no confirmation yet. And for a trader who would have entered when the butterfly and the 618 filled, he would have gotten happy as price wicked up. Let's come a little closer. Let's talk about the psychology, the psychological effect of entering that trade versus not having to go through that. once the trade enters for the butterfly fill and the 618 test, okay? Price action comes up, the trader is happy. Price action comes back down, even into the negative. The trader is like, what the hell? He comes back up. He comes back down. He's negative again. Look at this circus. Comes back up into profit. He's like, yes, yes, yes. He takes it back and he's back in the negative. It's a huge psychological strain on the brain. And trader might say, you know what? Fine. This has been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 hours. Half a day. I could have did something else with my money. Half of 24 hours and I'm in the negative. This is crazy. I know it's going to win, but look at the psychological strain that the trader had to go through versus waiting that out, because again, there was never confirmation on there. Okay. There was never a 3-bar reversal with confirmation at entry. You do get, watch this fake out. You do get bearish engulfing candle, followed by, see, remember, we want A+ setups, especially on confirmation with the 3-bar. Watch how this is like C-, okay? So engulfing candle, you get happy. Candle number 2, not a doji, more of a hammer, a pin bar, something else, but not a doji. No upper and lower shadow, big body, it's not a doji, so you're out of A+ range, okay? Third, the third bar and trigger does not close beyond candle number 2, so you can't go, okay? And you can save yourself a half a day without going through that. Oh, I'm up, I'm down, I'm up, I'm down, I'm up, I'm down, and till this happens, okay? Waiting patiently, okay? Until you get, let's move over, engulfing candle, okay? In the middle of that, followed by doji. Still not the best, but better than that first one. So you got upper and lower shadow and small body. It ain't the perfect one we want, but this one is definitely better than this, which is, I don't even want to call that a doji, but it classifies as kind of close to like the dragonfly family, okay? So you get bearish engulfing candle, doji, and you get it, bing, bing, bing. Confirmation finally. Okay, you do get confirmation after that 12th hour. Okay, now this part what we're seeing here is perfectly okay and to be expected to come back, if you see the wick here, to come back and test that area, okay? To test where that are the close of our doji. That's perfectly okay, okay? So in that confirmation here, pulls back for a couple hours on Friday, that's okay. All right, that's okay. Now let's get into the real meat and potatoes. Let's start talking targets. Okay, so buckle up. Remember, the premise of our trade is not the butterfly pattern. The premise of our trade is the 2618 trade, the double bottom followed by break and close followed by 618 retracement, which established a breakout and trend continuation. So we want to get involved in this new trend that was created. What does that mean when you trade the 2618 trade? Go back and refer to it so we can talk about the targets on it. On the 2618 trade, target number 1 is a retest of the high where price retraced from, okay? Target number 2 is a 127 extension from the low to the high. Okay, so we have to set these up. Remember when I came into the intro, I said this was going to be very powerful and something you've never seen before. So watch it over and over and over again. You get another 2618 training in it. You get another butterfly training in it. You get another 3-bar in it. You get an extreme amount of trade psychology in there. And look at these targets. Okay. Target 1 on the 2618 is a retest of the price in which the retracement came from, okay? Because you are now in trend continuation. Your same old classic buying the pullback. That's what's happening, but we just have it layered with 3 different shelves of confirmation. Okay, target number 1, retesting the high. Target number 2 is an extension of the low to the high and back, and it's going to be the 127. Okay, you can even get as aggressive and go full max 1618 on here. Now we're reaching, okay? Typically, when trading the 2618 trade, I'm conservative. If I can get to the 127, I'm out and I'm leaving it alone. But we're going to get a little excited. We're going to have some fun here for entertainment purposes only. Okay, so let's go plot this out so we can clean this up and get out of here. And we suggested, grab the long short tool, that our entry was at the confirmation of our 3-bar reversal. Once we finally got it, we didn't jump the gun. We didn't want that whole day of static. And we're going to push up and we're going to push up and we're going to push up until we see that 127. I actually really do want to go crazy and see what that would look like if we were extreme and out of our minds, and suggested full max 1618. We're not going to do that. Okay. Good thing about this. Okay. Good thing about this is our 3-bar reversal. Okay. Allows us to not have to have stops under the butterfly. We don't want that type of drawdown. That's horrific. We want to say, if you come and take us out after our 3-bar reversal that we would normally do, then you will be invalidating our entire setup and we'll go find something else to do. Okay. And we'll try to be great and amazing and the best people, the best traders in the world on another day. And it will keep happening because these things will keep coming. Because I tell you, as I tell you over and over and over, the market moves harmonically, whether you like it, hate it, understand it, or not. So that is our trifecta. Let's talk about it. 7.5 risk to reward ratio on this trade. Some unseen before things, as I told you. All we need now is the W, which we don't have any control over. All we can do is do the work and set ourselves up and try to put ourselves in the best of the best possible positions using our tools, skills, knowledge, trade psychology. And at that point, we set it and forget it. And we're going to let the market do what it does. So if you like this video, give it a thumbs up. I think everybody deserves to see this one. Don't be stingy with it. Share this video all over the place because you have never seen anything like that before and people need to see it. Subscribe to the channel if you're not a member of the Harmonic Trading Club. Okay. And don't forget to head on over to the Harmonic Trading Academy playlist where we teach everything that we taught in this video: butterfly pattern, 3-bar reversal, 2618, all this Fibonacci stuff, all of that and more on the house free. No gimmicks, no charges, no discords, no Lamborghinis, no fluff, no lies. We're going to find out about this one definitely. And we'll be able to come back and say why it didn't work. But the risk is so low, it'll probably be nothing to really talk about. So guys, be good. Take care of yourself. Subscribe to the channel. Hit the bell icon so you can be notified when amazing videos like this come out so you don't miss them. You don't want to miss stuff like this, okay? Straight from the Harmonic Trading Club. You guys be good. Take care of yourself in the market, and I'll see you in the next video.